Good morning, everyone. My name is Farrukh Siddiqui. In earlier life, I was a banker. I have been in UAE for 25 years, worked with the regional bank, and my last activity was JP Morgan. I was running trade and ECA for the region, MENA and Sub-Saharan Africa. We started ourselves a corporate boutique finance house in Dubai. Our main activity is advising clients on ECA front and also help family houses to work on the debt equity side. On my left-hand side, Eva, who is part of the German ECA. Next to her, Graham, who is part of UKEF. And we have an interesting client who is not a ECA, but who is using ECA a lot. So it will be a good story to hear his perspective that how the ECA are evolving in this region. They come from a very large company and they have a huge presence in Saudi and UAE. They are part of ACWA Power, a very well-known company. And we have a colleague who couldn't make it physically due to some unforeseen reason. He's virtually joining us today. Semih, he's part of SMBC, he's based in Dubai. What we will do, we will just spend a very quick few minutes for each individual to give a little bit introduction about them, what they do, where they are coming from, and what activity they see here in the region. So Eva, may I request you to please say a few words about yourself? And
Sure. So yeah, my name is Eva Steinhaus. I represent the German ECA, Ola Hermes, here on the ground for the region, for the MENA region, plus Pakistan. In this position since September 2019, and it's the first office, so to speak, abroad that we have as a German ECA. You see myself on the menu, so to speak, on the agenda as a competence center. That's just our setup here because how the German ECA is set up in Germany and how you could not export that, so to speak, to abroad. So. Yeah, I work very closely with Ola Hermes on a day-to-day basis, whilst I sit at the German Emirati Joint Council of Industry and Commerce. Also an ex-banker,
yep.
Commerce Bank, export finance, but also some diverse portfolio of project finance and private equity before that.
Thank you, Eva. Graham, over to you, please.
Good morning. My name is Graham Scopes. I've lived in the Gulf for 24 years. I have more years of experience as a banker than I have as days as an export credit person. So I joined UK Export Finance in January. I have a total of 19 years with JP Morgan Chase and 16 years with Arab Banking Corporation, or Bank ABC.
Okay,
now
I didn't know that.
Based in Bahrain. I am one of 3 international export finance executives, as UKF calls us, based here in the Gulf, and we are 3 of 17 scattered around the world whose role is to help generate export finance opportunities for the UK. We are increasing the number of IEFEs, and that will eventually grow to around 30, representing the importance of exports to the UK. And we work closely through each of the embassies with our colleagues of the Department of International Trade to, where appropriate and where necessary, to help exports, to offer finance as part of a facilitator to the transaction. Thank you.
Thank you, Graham. Very brief. Leslie, may I request you to say a few words?
Good morning, everybody. I am Leslie Abraham. I am a director of project finance at ACWA Power. So at ACWA Power, I have been there for almost 9 years, specializing in raising non-recourse long-term project financing in primarily the GCC region. So I worked on a number of transactions in Saudi Arabia, in Oman, in UAE. I was involved in the first renewable energy project in Dubai, which is the project that has been running for 3 years. And obviously, over the years, I have been working very closely with commercial banks primarily, but increasingly over the last few years with ECAs. So very interesting to be part of this discussion and look forward to hearing from everybody.
Thank you very much. Semih, would you want to say a few words, although you are a known face? But
yes, hi Farrukh, hi everyone, it's good to see you guys. My name is Semih Ozkan. I'm part of the SMBC Structured Export Finance team. based in region. We're covering corporate and project finance related ECA and broadly agency financing for various sectors and borrowers and sponsors. And on a day-to-day basis, we really engage with all the agencies across the world and connect the dots for trade and investment flows. Thank you. Back to you, Farrukh.
Good. Thank you very much. If you don't mind, Semih, can I start with you? Okay, you are sitting far away from us, but
Spotlight.
I wanted to give you a chance to kick off the session with yourself asking a question. You are on the banking side. Most of the time, your role is a lender role, right? And I know SMBC have done quite significant contribution towards long-term financing. Pandemic time, things were a little slow. And when things got slow, all the ordering activity also went down. But we see things are coming back. What trend do you see? I mean, how your pipeline looks like? How do you see that clients are coming back and looking for these solutions which require long-term kind of financing?
Great. Interesting question. Thanks, Farrukh. First of all, let me thank GTI as well as all the panels and participants for coming together and to reflect upon, kind of matters and topics very important to trade and export finance in the region. I wish I were there in person, but yeah, we are online. As much as, is practical, I don't think is that impactful, that we learned along the way. So please take all the benefits of the GTR and the platform on the ground in person. So Farrukh, coming back to your question, I think it's a very, very good one to reflect upon for the last 2 years or so since the onset of COVID-19. Particularly the pandemic challenged and changed everything, and export finance is really no exception. But I wouldn't want to generalize this because we've seen several deals and transactions actually progress really well and attracted quite a bit of liquidity, while in some deals and some sectors didn't work out that well. And I think the picture is really uneven. And this is because maybe the COVID-19 is not more of a liquidity-related crisis. It's more of a maybe economic supply and demand-related issue. And when it comes to certain sectors, it got impacted a lot more during the COVID-19 compared to other sectors, and it's developing that way. And ECAs, I think we have all the ECA colleagues in a basic foundation, or the role of the ECAs to basically support the trade and export and growth of their national economies by providing certain products, direct financing, indirect financing, or even insurance products, right? I don't think it has changed during the pandemic or anything, and it just actually got stronger. And in response to headline or the session question, did it go away? No, it hasn't. And it has actually become a lot more stronger and a lot more relevant to a broader market. And let me, what I mean. First of all, I think the governments, ECAs, authorities, multilaterals, I think reacted quite swiftly to counter, let's say, the socioeconomic impact of the COVID-19. And I think they addressed very, very important topics and issues that would have really positive impact immediately, like enabling access to working capital. It was very important, or short-term debt reliefs, and very important the aviation and other sectors that were relevant. And that kind of and broaden the use of the ECAs during the market as well. And as we know, is a very what we call the classical counter-cyclical product itself, and in many sense, I think it's designed to help and support economic recovery or recovery phase in crisis like this, right? And the second part, and I think what we see the broader implications of the current pandemic, which I think presented opportunities for the ECAs, and that's what we see as a trend. Traditionally, it was long-term capital-related, financing going into the emerging market, developed market. But what we see now is actually we see a lot more short-term working capital-related financing. Look at MEGA, for example, as a multilateral setting up a short-term working capital program along with IFC. And then we see also green and transition-related financing supporting not just for export, but export development. I think Graham can maybe touch upon, but UKF, the export development guarantee, or the green growth programs, I think coming just to the market to support during this period, and I think very important. We also see the borrowers is not anymore necessarily in the emerging market or developed market. They could be as much as in a developed market itself to support the local economies and to develop the exporting base as well. We see a number of these products coming out and supporting, especially in the aviation sectors and etc., or even the local manufacturing to protect and support these developments. So all in all, I think we see a lot more relevance of ECAs and agencies coming, and I think looking outlook as well, I think we will accept an acceleration of that trend, that ECA is becoming a lot more flexible when it comes to how it can be play a significant role, a meaningful role, and to harness their basic role. I think it's important. We also see OECD consensus changing. Recently, for example, they increased the local cost ratio to 50%, so category 2 countries. We also see now a trial for reduction of the down payment percentage. And I think very important, it's going to affect a lot more infrastructure related financing. And we're going to see a lot more ECA activity in the sustainable finance ecosystem as well. I think that's how governments and along with that ECAs are, I think, playing a role. These are, I think, a couple of things we observe and we build on the pipeline. And again, the headline question is, did it go away? I don't think it has gone away anywhere, but I think it got a lot more stronger and a lot more relevant to the market.
Good. Thank you very much. Actually, you touched a lot of things, and I'm thinking that where do I start with Graham? You said a lot, but clearly the local ECAs, you highlighted ECI, and we see, they are doing amazing job, and Saudi Exim, which is another entity emerging, and they're doing a significant role. And you touched on a point that short term was always not the ECA play, and I think with a lot of flexibility, down payment, as you mentioned. Graham, do you want to shed some light on that? I know you have a little new entry on the ECA world, but being a professional banker. And
I think I'm going to pick up on the question as well, because I don't think you can make a comeback if you never went away.
Yes.
But I think that the way that the ECAs have operated in the region has changed over time. I first came here in 1997, and one of the first transactions I worked on was Oman LNG. This was the original financing for the first LNG project in Oman. And that transaction was a $2 billion financing, and there was a small $400 million commercial tranche and 4 ECAs. And the ECAs were part of that transaction for credit risk reasons. The lending banks of the world were not comfortable with the countries of the region. Now, what has changed over time is that need for credit support for the countries of the Gulf diminished, and a new trend, the next phase perhaps came, which was the need for ECAs to be involved for capacity reasons. Transactions got bigger, world scale was a lot bigger, a lot more expensive. A world scale petrochemical plant might have cost $3 billion, became $10 billion, or whatever number you think of. Same for other industry sectors too. And as a consequence, ECAs were part of the solution rather than the solution. ECAs were never competing with banks. They contributed to the banks. They don't want to undercut banks. At the end of the day, ECAs look at transactions exactly like a bank does. It wants to get repaid. Simple as that. However, it also wants to support sourcing from its home country, as the UK, of course. So I don't think ECAs have come back. I think what's happened now is there's 2 elements. Sorry, I don't think they've gone away. Sorry, excuse me. I don't think the 2 elements have come together. So there's an element of credit and there's an element of capacity, because there is new technology, there is vast infrastructure projects which are beyond the capacity of even the very wealthy banking sectors that we have in the Gulf nowadays. And the capabilities of the local banks, the capabilities of the international, there's no structuring that's needed from the ECAs. There's no, it's because to do the projects that are being tabled, everybody needs to come together. And in the case of the UK, I'm sure Eva will say the same for Germany, that we want to have exports as part of the solutions. And to help facilitate that happening, then we will contribute cost competitive solutions to the overall picture.
Thank you. If I may ask you, we see there's a huge transformation going on and ESG and other stuff coming up, and most of these government are focusing. If you look at UAE Vision 2021, Saudi Vision 2030, there's a significant focus on ESG. And that area which is emerging very well in the developed market, but emerging market, we know that things will not move fast as you see in Germany or US or UK or generally Europe. As a German ECA, well, you represent government of Germany now. You have been a banker on the lending side and also helping on the ECA front. But this transformation, what do you see? What are the opportunities emerge, let's say, Middle East and Africa side? I mean, what making you busy in current times when things were slightly slow, as we all said, COVID has slowed down everything. But now things are picking up, and Germany has a huge contribution in this region and also in Africa. So maybe a little bit for the audience.
I think for what the pandemic has slowed down in many other respects, it has actually accelerated the discussion about ESG. And not only the discussion, but also implementation of certain requirements and regulations. On the ECA side, of course, we have frameworks, we have guidelines as the OECD guidelines, and where we agree as ECAs to adhere to World Bank policies and so forth and assess transactions in certain ways. But that has come a whole step closer. And from a German side, specifically now, I think that it has even moved further to the forefront. I mean, we had initiatives, we were having our eye on renewable energies, but right now, since the change of the government last year, and now the government sort of forming itself around certain issues and continuing on, let's say, the climate strategy, the national climate strategy, trickling down into a national climate strategy for export credit guarantees as well. So a lot of things are in the works at the moment, so not much I can say specifically what's going to be the outcome of that. I can only say stay tuned. But also with the government having changed to a what we call Ampel-Koalition, which translates to a traffic light coalition, where we have a significant impact of the Greens also. And our economic ministry, which used to be the Ministry of Economic Affairs and Energy, has been renamed now to the Ministry of Economic Affairs and Climate Action. So I assume that change is not only in name. And so there's a lot of work being done behind the scenes at the moment on the German government level, on the ECA level, of course. They are brought in to discuss. We had, during the pandemic, a special initiative for renewable energies. As many of you know, 51% is typically the requirement that the German ECA has as having German content in your export contract. For renewable energies, that has been brought down to 30%. And among other things, and so you go from that level, of course, then also to a European level, EU level. You had, since quite some time, the E3F, as it is called, Export Finance for Future, starting with 7 countries coming together and looking at coal, looking at nuclear, looking at fossil fuels and how to finance them or not finance them any longer, how to phase this out. Of course, we don't want to say only stop this and stop that and have no alternative. That's not going to be the solution, especially also as when we come to electricity needs, and I'll leave that over to ACWA Power later. But there is more demand of electricity, not only that we need more in general or become less or efficient in using it, but we speak about digitalization. Where is this going to come from? So it's going to need to fill the gap in some ways. So there's this discussion on the EU level, and then of course OECD guidelines also need to then adjusted and amended, and that's been being done at the moment. Has been already come some way to it, and include also hydrogen financing as well.
Right. No, I think it's coming up very nicely, Leslie. I want to move to you because you use these guys, right? There's a huge reliance in sector like power and transmission, where traditional methods are very difficult to provide a solution. Clearly, the kind of business you are in, where long-term financing and large ticket financing is the critical part. And also, we heard that we're moving towards renewable, and non-fossil based energy, right? Although we can't take it out immediately, the region where we are in, that's the main thing to run the business. But as we said, that all the governments are moving more, ignoring that, and they want to get into renewable side. So how are you guys preparing yourself for that? That's one. And how do you see the ECAs and banks are supporting, company like yourself, ACWA Power?
Absolutely. So I think as you rightly pointed out, right, ACWA Power is engaged in developing projects in the power and water sector in this region. And in this region, these sectors are developed purely on a PPP basis. That means you have a government entity who's responsible for procuring power and water, right, from private off-takers purely on a competitive tendered basis. So this government entity ultimately has sovereign credit, right? And they package the transaction in a way where most of the risk outside of operating risk is ultimately passed on to the government, right? And the focus is on procuring transactions on a highly competitive basis, right? So they announce tenders, define the project, define the financings in a way where the bidders can put together technology solutions that minimize the tariff as much as possible. So this is the background that we have been working on. Over the last few years, as you rightly pointed out, the technology has really transformed, right? Previously, for the last 20 years, the region has been dependent on oil-fired and later gas-fired projects. But over the last 5-6 years, I think nobody is doing conventional projects anymore, right? It's always solar everywhere. You see headlines where you see tariffs, records that were set being broken the next year, right? And the tariffs have been going down. And in this context, the governments in this region have been eager to procure renewable energy because it makes sense for them from a cost perspective. It reduces the consumption of oil and gas, obviously, which is important for export rather than for local consumption. So transition towards renewable energy is happening at breakneck speed. And as well, I would like to highlight that on the desalination space, right, which this region is dependent on seawater desalination to supply water, right? And that sector is also being transformed, right? Previously, it was thermal desalination based on fossil fuels. Now it is all going to be reverse osmosis. So these two transformations are happening as we speak, right, over the last 4 or 5 years. And that has driven a lot of the growth in capacity in our sectors. So the question is, how are we financing these transformations?
And where does the ECA sit in
Absolutely.
that? Yeah.
So given how this sector has evolved, right, a lot of this risk is ultimately goes back to the government sovereign off-takers. And they structure it in a way to make the projects highly bankable. So these projects are highly bankable to begin with. That means we have a lot of appetite from commercial conventional lenders to provide long-term financing, 20 years, 25 years. And as developers, we are eager to ensure that the tariffs are as competitive as possible. So in that situation, right, bringing in an ECA has been a challenge because there has been luxury of financing, to be very honest. But as time progresses, right, ultimately these government entities are waking up and realizing that they need to manage their bank exposures, conserve capacity so that going forward they can continue to develop projects, right? So this is where I think ECAs can play a part because ultimately you are extensions of your governments, right? And you have and you can reach out to some of the procurers in this region and try and work with them to make sure that they conserve their bank capacity, right? So the focus of some of these governments should not be just minimizing tariff, but also to ensure that there is diversity in how the developers arrange the financing, right? So we are seeing signs of that, right, happening in some of the new projects. For example, Abu Dhabi has been pretty focused on ensuring that you can recycle the financing. There is enough liquidity for new projects, right? How do you basically release bank capacity from existing project through debt capital markets? I think other off-takers are also following the trend in a way, right? And making sure that the new projects are financed properly. So this is where I think ECAs can play a lot of part, right? In working with governments at the defining stage itself and making them aware that there is room for diversification of financing so that capacity is preserved going forward.
Thank you. Semih, I want to move to you on the important topic, sustainability and ESG. It's a top topic currently we hear in every forum. How you guys are preparing yourself with that? what opportunities you see
Yeah,
as a bank.
Thanks, Farrukh. It's a really important topic for us to reflect, especially within the context of ECA financing. I think by definition, ECA financing has always supported sustainable development, and it's been really ahead of the curve many years before we get to this, today. Let it be the environment or social due diligence that ECA is conducted, or the anti-bribery, corruptions, and sustainable financing, etc. But I think we should maybe accept the fact that for the recent years, ECA has not been keeping the pace with the product and the solutions coming up to the market, with green loans, social loans, or sustainability-linked loans. But it doesn't change the fact that ECA finance is by nature is supporting this sustainable development. And I think what I would like to highlight recently, Sustainability Working Group within ICC, Global Export Finance. I'm proudly part of it, along with 16 banks, and I think coming together and published independent white paper reflecting on where the sustainability in export finance is as the current status, and I think it was important to note, and then what's going on outlook-wise, and also provided certain key findings and recommendations for the market. And I think this is kind of mobilizing as much as possible both the ECAs, the agencies, along with the authorities to move into the right direction, where ECA finance can be part of the broader sustainable finance. And with all of these national visions, sustainability is a big part of it, and along with the banks, nothing is picking up quite well. Of course, the banks are looking on one side, the league tables, but on the other side, I think there's the right thing to do so, coming together and blending to support type of transactions and transitions as well along the lines. And I think ECAs have a really meaningful role to play. Not with just the existing product space, the tied solutions, but they also coming up with untied related financings where they support transition related financing requirements. It's not only European ECA, but Asian ECAs as well, quite strongly shaping up their products and coming up to support, especially their long-term customers and client or strategic partners, whatever they consider. I think it's important. So it's mobilizing in a way both direct financing to support the transition and also bringing indirect financing to support the banks to help the financing. So I think we're seeing both of them coming together in a way supporting that sustainable development across the region and worldwide as well. Yeah, back to you, Farrukh.
Thank you. Eva, do you want to say something on sustainability side? You did say something, but do you want to add a few more points on what Semih have highlighted?
Yeah, I mean, I touched upon a lot of points already. What I was just going through in my mind is also, on the one hand, the discussion about the role of ECAs these days in the region, having to play a role in certain ways of whether short-term financing or long-term financing. From an ECA perspective, for example, it's a different picture. You don't always see that as a banker or in this kind of forum. That short-term financing has always been there. Sometimes we support an exporter on the background of things that is actually a very dominant, at least for us here in the region or in Saudi, for example, instrument to play. And right now it probably sort of keeps a balance in that regard. Also, the ECA finance has become, in my view, become quite established over the last few years. And my experience now as sitting on the ECA side is that especially the larger companies or the government-related entities are much more well-versed, much more cognizant of what is going on in that space. Not because they want to tap this as the first resource, but they want to have it in their portfolio of financing opportunities. And they're very well informed or utilize services such as your company to really sort of be ahead of the game and notice or really know how they can put this patchwork together in order to finance the transaction most efficiently.
Yeah, I think on the government side, or we call here GREs, they are well aware that how these structures work. But I think if you look at the private sector, which has been always kind of ignored, because everyone jump on $300 million, $400 million kind of deals, but there is a huge market around. And sustainability is equally important for them. Local groups, they may catch up faster than the government, but I think there's a huge push from the state side that you have to start thinking on that. So I guess ECA, I mean, my personal view, I guess the ECAs have to just not look at the GREs, where people like ACWA Power are participating, but ACWA Power could also work with the private sector. And those are the deals which become sometimes a little bit difficult for ECA to accept. I think there has to be a thinking around that direction, that how do we help broadly client base, not just entities which are ministries or GREs. So Graham, UKEF, obviously there's a huge mandate on sustainability,
clean
huge
energy.
talk in UK about that. And you guys much ahead on the curve. So just want to say a few things on that. How do you see the transformation here in this region? Primarily UAE, Saudi, these are the two big economies. Everything is start from here and then move down to North Africa and all.
No, I think that's right. I think that the UAE and Saudi Arabia have often led the way in terms of transaction structure types and so on. I think in terms of UK export finance, there is undoubtedly a positive discrimination towards clean energy and sustainability. The only areas that we will do direct lending any longer is in clean energy in those areas and sustainability. The other programs, the guarantee-based programs, buyer credit, supplier credit, is still available across the industries that we support. And as was announced last year, the UK Export Finance will no longer support fossil fuel extraction industries. So these are very clear
here, right?
and plain statements. So I think that the new technologies that are required to deliver these agendas are creating opportunities for export credit agencies in of themselves. Because banks like to lend to established technologies, proven technologies. They don't like to lend to areas where you can't readily point to a good track record of something working. And there's an increased role for export credit agencies here to help those technologies become established, and probably in time, export credit agencies will step back a little bit, perhaps other than for capacity, as I mentioned earlier. And as the credit risk of those technologies becomes more accepted by the credit committees of banks, then they'll be able to get the approvals for the types of transactions. The importance of this sector for us is underpinned by the fact that a couple of weeks ago we had UK Export Finance's CEO down in the region talking specifically to potential clients and sponsors of projects about sustainability projects. Next month, we've got our head of origination down here as well, again, with a similar sort of agenda. He's in Saudi Arabia too. So this region has got a very high focus from the top levels of management within UK Export Finance, and of course the British government overall as well.
Right, thanks. Leslie, just on this point, because you will be using these services, right? How much do you see that your client base, which is heavily, government of the region, do you see that they are moving on that direction because they know that the funding is available, the coverage from the ECA is available, guarantees are probably having some kind of concession when you go on sustainability on ESG
Absolutely.
side?
I think the good thing about working in the sector now is that some of these sustainable technologies make a lot more economic sense than the conventional technologies. Right. We are talking about solar and wind power being cheaper than the marginal cost of gas. So when it comes to economic downturns, the COVID-related downturn or oil price slump, right, it makes more sense for the governments to actually transition towards renewable energy. Not only it's environmentally friendly, but economically it results in a direct saving to them. The same thing goes for water desalination and transition from conventional to seawater RO, right? So the good thing is that the sustainable sector is on autopilot. And that is one of the reasons why governments are announcing high targets, because ultimately it makes economic sense for them, right? And as the GCC countries expand their capacity for solar, wind technologies, then automatically comes for the need to make these sustainability a bit more downstream. So we are talking about deploying battery capacity, right? Deploying hydrogen fuel buses. So countries are basically expanding the scope of procurement to some of these downstream, where we see a lot more new technologies and new suppliers having opportunity to participate. And while there are not too many programs at this moment, I think we see a lot of activity happening in these more specialized downstream, more distributed sectors, right, going forward. And that is where I think a lot of specialized suppliers and ECAs can really participate.
Sammy, just very quick thought, before we move to the audience. I know people might be having questions, and I see questions are popping up on the device also. On the local ECAs, the Saudis and the UAE one, do you see collaboration with the banks? Local banks, we see that yes, they're getting connected very well with them, but how much do you see that international banks are willing to work with them and support this state-owned companies' drive? Because this is very important, on the short-term financing. We know that numbers keep growing, but do you see international banks are also going and, building relationship with them?
Sure. I think short answer, Farrukh, is yes, and I'll expand on that one. But before that, on the topic of sustainability, I was hoping to add a little bit further, if you don't mind, very quickly.
Yeah, go ahead.
I think ECAs have traditionally been really front runner when it comes to supporting new technologies and industries. And it happened in the past, it's happening now. It's not just hydrogen, it's the EV battery plants or wind or solar and etc. And I think this is the part where we see the trend as well. If you allow me to say, the COVID-19 is kind of a blessing in disguise when it comes to, move further into sustainability. I think it's pushing everyone, including the ECAs, to do a little bit more. It's not just with the products and solutions, but also various other incentives to facilitate, I think, investments and also financing by private sector into that area. With the full stop on that one, to your question, I think it's very important development in the region that having local ECAs or export development, I think, institutions, let it be whether it's in Saudi or UAE. When we think about the region, I think we always think oil, and it's true, but there's a lot more happening in terms of export, in terms of products and re-export to Africa, to Southeast Asia and overall Asia. Today, I think we see mostly short-term insurance products. And yes, it's true to say that local banks will play a lot more role to I think, use these products. But I think we see a lot more, strategic partnership, given where the region's trade and investment flows are. Just to highlight to your question, SMBC has an MOU with Saudi Exim, and we'd like to develop and connect the trade flows around that as well. So we see a lot more working relationship both with Saudi Exim, Etihad Credit Insurance, but also ADX supporting the funding for the non-crude oil products. What we also see, because they are new and not many exporters know about their products and solutions. And I think there's this the view that is just oil. What else to export? But I think once the buyers of the, let's say, importers from the region get to know, and that's, I think, the role of international banks to a large extent, to spread that news and bring that solutions with the, let's say, borrower marketing in the worldwide network, I think it will connect the dots. They have really powerful products, and I think we're really keen to develop and to support. But also, I think we know the region is quite heavily dependent on, what you call the oil. But it's already transitioning, it's already diversifying, and these institutions, I think, will play a key role to support that transition, but also the national visions that are around with that coming together.
Good. So I think we are pretty much on time, right? We have 5-10 minutes for audience.
Yeah, you're good on time. Very good.
Yeah, because I know that you will get upset, so I kept it pretty much disciplined on the time. Can't afford to upset you.
Sorry, Farrukh, I think my internet didn't last. Yeah.
So any question from the audience, any observation, any suggestion?
I have a few questions on the app that I
already. Okay, good.
Give to you. In terms of the sustainable finance and ECA cover, are there any particularly attractive terms for projects that are green?
Want to pick up? Do you want to pick up?
I can take that. One of the things that I hinted at earlier was the special initiative for renewable energies from the German ECA. It may look a little, I don't want to say lame, but a little different in comparison to other ECAs or what they have been doing already. But looking from a German view glass, so to speak, from the German ECA, and also the insistence, quite rightly so, I think, from the Ministry of Finance to say, look, we would put government money at this if the guarantee was drawn, and therefore it's taxpayers' money. Therefore, we want to see 51% German content. So for them, that's an even bigger step to say, okay, renewable energies, we make an exception. We say 30% is enough, and the rest can come from other countries. So that for us was a big win. It may sound a little bit less so when you look at other ECAs, but I guess that's also one thing that you need to keep in mind. The instrument here is not simply to help finance things. The instrument has a role to play to support your own exporters. Also, when it comes to new technologies, it has a huge impact as to what kind of instruments you are structuring, so that actually exporters are incentivized to move in a certain direction, perhaps move away from fossil fuel related technologies and produce more hydrogen, or find a way to get hydrogen back to Germany and those kind of things. So that is definitely on the way from a national perspective.
Very good, and the questions keep coming in, so obviously you've stimulated a whole lot of interest in your presentation. Next one, any indication on the level of local currency financing in the Middle East? Or it didn't say, maybe UAE or Middle East.
I think Semih, you want to take it? Yeah. Please, go ahead.
Well, I've got a very simple answer to that, is that UKF will provide local currency lending in 60 different countries globally, including all of the GCC currencies. So
wonderful answer. I think I can go to the next one, Farrukh. How were losses during the pandemic?
Say again, how?
How were losses? Losses.
Okay.
How did it go? How was business? How were losses? That's the question. Was there?
Semih, you want to take that?
Claims, I guess, is probably a better word. Yeah. But it said losses.
Yeah, thank you very much. Very difficult question for me. I think when it comes to ECA finance, the market come together, and it's very counter-cyclical, as I said. It brought together a number of, let's say, solutions and that support certain sectors, and aviation is one of them. That's basically short-term debt relief programs, and it's very relevant to some of our, very good names in the region, and it worked out, and it showed them, short-term liquidity relief, which give them opportunity to continue and focus on, their business resilience. But also we see not just aviation, the transportation broadly, the sectors. We also see direct lending opportunities or to their own, let's say, sectors that affected by the what you call the pandemic and related disruptions. I think we see the ECAs and agencies and broadly all the government stepped in quite swiftly to address. And in this regard, the losses is not a matter. It's how actually the ECAs help the certain sectors to become a little bit more resilient to mitigate this, the challenges that brought by the pandemic, to be honest.
Right.
And just one last one, and these questions aren't mine. I'm the messenger.
You're not asking, right?
Don't shoot the messenger, okay? Because he shoots back, okay? So regarding Africa and ECA-backed projects and, inverted commas, impact financing, is this a model that could be replicated in the Middle East? Now, I don't know what that means, but I think you probably do.
You did Africa quite a lot.
Right, but, well, I'm more covering the North Africa region. I'm just trying to understand the question.
Yeah, Africa has a lot of ECA-backed projects.
Yes.
And then inverted commas, impact financing, I guess that's the term. And is this model that is being applied in Africa something that could be applied in markets within the Middle East, or maybe more challenging?
I think Middle East is always there.
Yeah.
I mean, I would say that Africa is more on the frontier side. They catch up a lot more what banks and ECA.
Absolutely.
It's the other way around. That's the way I think.
Yeah, I think you're right. You're right.
Because ECA, we never saw that they are out, but
Exactly.
they are pretty much in post-financial crisis when liquidity went out.
Okay.
ECA came back, and then they started expanding towards Africa.
Absolutely.
So I think the journey, if I really look at from emerging market, Middle East clearly was the first one, and then it moved down towards Africa.
And any final question maybe from the audience? I think we've time for one. Any burning question? Yeah, we've one here. I'll bring you the mic, okay? Probably the easiest. Thank you very much.
Thank you. This is a question for Graham. You mentioned you're quite active in the region. I just wanted to understand, what is the sort of commitment that you're looking to expand in the region, specifically UAE and Saudi being a very active market?
The UK Export Finance has significant credit lines for all of the Gulf countries, and in recent years has not had the opportunity to use many of those lines for the UAE and Saudi, to pick up on your examples. So we talked about why that was, because of the banks being very strong here and capable of funding. So there are large limits, billions of pounds worth of limits for those two countries, the other countries of the Gulf too. And so we are not here to lend. At the end of the day, we are here to support exports. So if incremental exports can be created through lending, then we're in a position to help do that. But we're not here to lend for the sake of lending. Hopefully that answers your question.